Hi everyone, welcome back. Many of you might have heard the term double taxation. In this video, we will quickly cover what double taxation is and the three scenarios that may potentially trigger it. So, as the term implies, double taxation is when taxes are paid twice on the same income. Essentially, another way to think about it is when every dollar of your business revenue or your individual income gets taxed twice by two different entities. Let's quickly cover three scenarios where the law of double taxation applies. You really need to be aware of this because this may catch you off guard. The first scenario is the most common one, and this is something to be aware of for those of you who have a business or who want to start a business. Profits of a C corporation are taxed twice, at the corporate level and then once again at the shareholder level. So in this scenario, the business, in our case is C corporation of course, must pay corporate income taxes on their profits. As these profits are distributed, all shareholders then pay individual income taxes on the dividends that they receive from those profits. So a good example of this scenario is a dividend that you might receive from your stock. The company that you invest in pays taxes on the revenue, and then when that revenue is distributed to shareholders, you in this case, in the form of dividends, it becomes personal income to you, to shareholders, and then you get taxed based on your individual tax brackets. So if you are unsure what business structure may be best for you, know that a C corporation will be taxed twice, and as the result, it is really expensive to run. The second scenario has to do with borrowing against your 401k account. When borrowing from a 401k account, the amount borrowed is taxed since it is being taken out before the required minimum age. The amount is then subject to taxes a second time when the funds are actually withdrawn. For example, you might decide to borrow against your 401k for your personal needs, which triggers a taxable event according to the IRS tax code. Then once you reach a certain age and can actually use the money in your 401k, any amount that you withdraw will be subject to tax as well. The third scenario has to do with international trade or investments where the income that you receive is subject to both a US tax code and foreign taxes. I know that this sounds complicated, but it's actually pretty easy, and this is how it works. Many companies conduct business internationally. Even if you have, let's say, an online shop where you sell products online in the United States and, let's say, Canada, this tax rule will apply to you. The profits are earned in one country, but the business's headquarters are in another. So in cases like this, the business pays taxes in both locations unless there are special rules and agreements in place between these countries that effectively allow for a more favorable treatment of these profits for tax purposes. Thank you for watching this quick video. I hope that it helped clarify how double taxation works and where it applies. Please remember to subscribe to my channel, give this video a thumbs up, it means a lot to me, and share it with those who may be interested. I appreciate your time and we'll see you in my new one soon. Bye for now.